Hello, and welcome back to the Get to Know Hedge Fund Investing series with Carl, the Carl Investment Platform. I'm Jamie Uppenberg. We are on our last strategy for the moment, which is Denali. Denali is new to our platform, and so you'll notice when you look at it in the mobile app that it has not yet made what's called escrow. As much as we have low investment minimums, for you as investors coming into the Carl platform, the escrows on most of our investments, at least the ones that have come onto the platform to date, are not multi-millions of dollars. So most of our investments make it into, actually, when we bring them on the platform in general, we're anticipating them making escrow in 2 or 3 months. And right now we do anticipate that with Denali as well. So if you want to make this investment, we would encourage you to do so and help it get trading and get your money working within this strategy with others as well. So a long only, another long only. So similar to K2 is long only, Denali is the long only. This strategy is looking for gains in the market. When you look at the strategy, you're going to notice that it does not have the history of any of the other funds we've talked about. All of the other funds have the strategy that the Carl strategy is based on. Have been around for many years, and the other investment strategies we've talked about. Denali, a little newer, started in 2019. And so, Marcos Bueno is the strategy manager here. And to talk about Denali, I'll just talk about it the way Marcos does, because it's pretty simple. Essentially, he says if his investment portfolio, this strategy were his football team, his soccer team, then he would just be a very, very harsh coach, which means as soon as an investment makes an error, it's cut. As soon as one of his players makes an error, it's cut. All he's looking for are gains in the market. And doesn't that make sense? Isn't that what we're all looking for? But he's really removed the behavioral bias, the human emotion from, when do you stay in investment and when do you not? He's cut it all out. And the systems he's taken a very simplistic investment approach, which is I want to be in investments that are gaining, and built sophisticated systems around that. Now, the systems are not only built on the growth side of this, but also on the risk side as well. So again, simple concepts, simple investment philosophies with a lot of technology, algorithms, and systems built to realize it on not just a year-over-year basis, but a day-by-day, moment-by-moment basis. What I find interesting about Denali, again, I'm looking at 4 years plus year to date, a slice in time, as it were. You would look at the graph, and he's above the S&P. I have it compared to the S&P here. You would look at the graph and just think, how is it not correlated to the market? But it's not. And if you look closely, he is really good at taking the edge off of any of the downturns in the market, at least historically. So his targeted risk controls, they appear to be pretty effective. And when you look at the statistics, that also is apparent. So his largest monthly loss, you're looking at 6.6%. The S&P is 12.51 in this period. He's doing it. He's able to reduce the risk and thus keep more capital working and growing, which is the point of his investment strategy. This is one of those, it's currently and has been outperforming the S&P. The question is, how much growth do you want for how much risk? Those are the stats you're going to want to look at with Denali, but it can definitely historically has given that growth factor for folks who are looking for it. Last interesting tidbit for Marcos is he didn't even intend to create this strategy for as a hedge fund investment. He was in financial services. He did create this for himself initially. And as he was talking to clients who, not for this particular investment strategy, he was talking about his own investments, and they actually were like, we want to invest in that. We want you to make this like open and available. So, he got asked to do this. And so far, historically, statistically, it's performing pretty well. Keeping in mind The strategy only deploys capital when strong uptrends are present. This is common in the long onlys, right? They are looking for gains. If they do not detect a statistical opportunity for significant gain, these strategies tend to not take it. So it will, make sure that it protects capital in that way. If it's not going to get a gain, it's gonna wait. I think those are the big items on Denali. I do think, with many of these, it's really worth looking at its whole graph. This is one of the strategies where the recovery period does beat the S&P, the index, by quite a bit. So something to look at there, really strong risk profile. All right, we will talk to you next time. Just a couple sessions left in the series. We hope you're getting closer to being able to take a look at the investments and make the decision that's right for your portfolio. Chat soon.